Hello, traders. Happy Tuesday. It is 8:01 a.m. Chicago time on May 28, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're opening up fairly mixed. The leader today is crude oil at 59.04, up 0.72%. The bonds are up 22 ticks, and the 10 years are up 10 big ticks. The US dollar is up 19 and a half cents, but also the NQ is up 10 points. The Bund is up 12 ticks, and the Dow is up 16 ticks. So when I say mixed, I mean pretty mixed. Gold is the laggard this morning, losing $5.20. The ES is trading right on top of Friday's close. It's as if no time has passed since Friday's close. Very, very quiet weekend. And yesterday as well, POTUS traveled to Japan and returned and is on his way back through Alaska. Nothing significant happened there. No real news releases. So the market's in a holding pattern. Volume is low. Thanks for that feedback. Let's turn it up. All right. Hopefully that's a little bit better. Okay. So let's take a look at what we're expecting for today. There really isn't much I can say about, the news or whatever. There really isn't much driving us around. There were some parliamentary elections that took place over the weekend, and the results were quite interesting. Quite a few shakeups there. And then as far as what we're expecting for today, we just had the U.S. S&P Case-Shiller home price release. It came in at 2.7 versus 2.6 and 0.7 versus 0.3. We expect Dallas Fed manufacturing at 10:30. And then other than that, it's relatively quiet. There's a business confidence out of Korea coming out at 4 p.m. Central, 5 Eastern. And in Australia, new home sales at 9 p.m. Eastern. So really not much on the calendar either to disrupt our auction. The volume's still low. All right, thanks for the feedback. Let me check my settings. Let me pause for a second. It's no good if you have to squint to hear me. I might as well not talk. Un segundo. Okay. Levels. Yeah, it's way down. All right. So this should be better. Okay. So not much here to talk about in terms of the calendar. Let's take a look at what was expected on Friday versus what we got. Was definitely off in my estimate for the range. The primary expectation is we're likely to revert back into the range, to the top end of the range, somewhere around the 38, the 38.30 area, and then expected a pop out of the range to 28.43. Expected about 9 points in total. And it actually had a lot more. It was more of a selling day. We had a bit of a drive off the open. Scenario 3 was off, and Scenario 2 ended up playing out, but there was no initiative push to 43 for the sell. Now, I really wanted those 43 short back to 22, but the market wasn't so kind. I'm going to show you this on the trigger chart simply because it was a relatively muted session. The volume was quite poor. 1 second. The volume was quite poor, and turning my headset way down. Okay, the volume was quite poor, and overall, this is what we would expect on a holiday. But you could see the range was 28.42 to 28.20. That's quite a bit of range for a pre-holiday trade. We didn't quite get to 43.50, 43 quarter. That's the price that I showed on the chart. This the price we want to sell against on scenario 2. Again, here's what scenario 2 looked like. We would push up into 43.50 or so, 43 quarter, come back, and then get down into 22 even, right? That would be the target. Here's what actually happened. It pushed to 42, so missed our turning point here at 43 and a quarter, and then it ended up, where did it end up going? There's your 22. It pushed to 20.75. You could see it resting on top of the point of control. So it was scenario 2, except that scenario 2 we opened a little bit higher than where we were at the trader bite. So what do we learn from Friday? We learned from Friday that the market really is still measuring the inputs it's getting. It's not really correcting. It's not pushing up. It's not pushing down. And it's holding sideways. We ended up with a higher high, higher low on Friday. Point of control in range out of value, so just slightly out of balance. We ended up with a relatively weak high, an okay taper on the low, and a profile that was pretty much had 3 small distributions, but I would call that balance really once it fell below this 28.33 area. It kind of held on down to 22.75. So really, this is the accepted price range here, and guess what? That's where we are this morning at 28.30.75, 28.30.50 currently. Could not get back into the OS in terms of setups. Some pretty good returns early on to the OS mid VWAP twice, and then it just started to move away. Once we got back in the range, we had a pretty decent setup right here. Prior high, which is the screen line. Prior high, stock zone, mid VWAP, but there was a bit of a squeeze there. That price was at about 31.75, which is where we closed, and it ended up pushing to 33.75 for the scratch, and then 35 for the stop, and then it sat sideways there before it let go a little bit. Overall, not profitable. This really clean, clear test into a confluence area for short wasn't profitable at all, as it just sat sideways for the rest of the session. It just made no sense to sit through it. So that's pretty much it. 2 setups for that session, 2 clean setups for the session. Actually 3, and one of them, this one didn't quite work out. Okay. Oops. So that's where we were from Friday. What have we done since? Now, I've wiped away Sunday's session. I do so just because it interferes with how my data is displayed on the RTH. Actually, I wiped away, yes, so let's see, 24, 27. Yep. So I'm considering yesterday's profile to be the one that that is valid as an extended profile. The volume is pretty low, relatively low compared to prior sessions. It's still high compared to the averages, and overall had a very positive skew. Once we opened, we broke down at about 1 a.m. Central, which is when the Treasury market opens in Europe, and it's been a seller since. That channel up was broken and became a selling channel, and then recently it's a short-term buying channel. It looks like a corrective move. So what we had last night is an impulse down, pullback, and then continuation, classic continuation, and now we're potentially in the corrective mode. Here's the problem. The problem is, given where we closed on Friday and how we closed, given what we've done so far in this overnight session, there's really no clear edge. Both sides are kind of battling it out. And then Friday's high was the midpoint of this gap zone that was left behind from Thursday. So Thursday we had a gap up. Friday we couldn't fill that gap, but we tested the midpoint, the exact 50% point at 42 of that session, and came off. And I'd be very interested to see if it ends up coming back to 42. If it does and pushes through, then it gives us a nice little target up to 52, which fills in the gap zone from when is it? Wednesday's low, basically. Wednesday's RTH low is 52. So that brings us to 52, and above there, it's 56.50. Those are the key areas above. Key areas below it remains to see if we push to 20 again. If we push to 20, then we're looking for 28.05. Last week's low, and then beyond there, 28.02, 2800, and then we start to look at 27.96, 27.92, blah, 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 blah. So take a look at a big picture chart. It's really important to keep an eye on what's happening, at least on the 60-minute. Before you prepare, a lot of my stock zones come off that time horizon, 120 and 60-minute, just to see what the big picture is, so we don't get lost in the noise. So what are we expecting for today? Let me prepare this chart here. Oh, part of the review. Let's take a look at CT Bookmap. Here's what's happened in the order flow. So CT Bookmap does not filter out for holidays or whatever. We can remove this data, but it's not all that important. The Sunday trade was fairly quiet. The Sunday through Monday trade. By the way, officially, this is still Tuesday's session started on Sunday. So this is all considered for margin purposes and so on. It's all considered part of Tuesday's session starting Sunday night at 6 p.m. Eastern. And so you can bunch it together. There's many ways to skin this cat. But overall, when we look at the order flow, we have that we have that algo that just is always there when the European market opens. There it is, 1 o'clock my time. This algo just tracks the market. And then we do have some liquidity areas that the market has created, one of which is right in here. And then down here at 28.22 ahead of the 28.20 low. 28.22 is the overnight low. But overall, I'm not seeing any good clues from the full depth by looking at the full depth on Bookmap. There's really not much going on here that could lead me to skew to one side or the other based on order flow. Okay, so let's look at today's action again. Here it is. So what are we looking for today? Pretty quiet is the expectation. Not expecting any surprises. We're opening right up against Friday's close. The expectation is for an open auction at first. I'm looking for the market to skew down and test towards this 28.22 area. I'm looking for an impulse up as the primary scenario, and I'm looking for it to start moving back up into the gap zone towards 52. If it makes it to 52 and starts pushing into Wednesday's range, the next area up will be 56.50, as I said. 56.50 at an equilibrium is likely to be achieved at 28.60. This is a bullish scenario. If it's not able to get back into the range, it is likely to just push back and hold in the gap zone. On scenario 2, which really has an equal chance, we end up squeezing up and really starting our push into the through the 43, and then we hold back in the range. We're likely to hold a very tight range today on scenario 2, looking for about 10 to 11 points, testing the other side. And the way the market closes today is really important. If we close below Friday's low, we're likely to see that 2,800 come to fruition and then push into 90 and 84.50 and so on. But honestly, I could draw on here all I want. It's really anybody's guess what this thing's likely to do. We are really balancing out based on the last 2 days. These 2 days together, let's draw a profile around them. These are the key areas based on the last 2 days. So you can see that 28.22 is that point of control, and it's also the low of the overnight session. The overnight session low, it's 28.22, and that is the point of control or the balance point for both these days together. You can see that it's fairly fat profile. I expect a little bit of energy, and that's why I'm looking for the scenario 1, and I set that as scenario 1. I expect the market to move back into this range up here today. If it's not able to do that, I'm expecting it to be very, very quiet and a pretty sleepy trade. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.